Hey guys, it's been a tough 18 months if you're a homeowner. Not only have you had to handle high interest rates that, let's be honest, have hurt quite a bit, but you've seen your house value going sideways or down for at least a couple of years now. And that promised recovery that we had in 24 didn't arrive, and 2025 isn't looking much better. Auckland house prices are down 2.8%. It certainly doesn't feel like there's going to be a recovery anytime soon. The problem there is we've got oversupply. There's a lot of properties listed in the market and we just don't have the buyer activity there. Affordability is still an issue, and until that fixes itself, I just don't expect to see the market take off. It also needs some tailwinds, and they're just not there yet either. And those tailwinds predominantly are going to be consumer confidence and business confidence, strong investment decisions coming from business, and higher levels of immigration. You just don't see really any of that on the horizon in the short term. If we flick over to interest rates, that's probably the one factor that is working in the favour of the housing market. These lower interest rates will eventually flow through to consumer confidence and spending. Doesn't feel like it's quite there yet because we've all been through a whole lot of hurt, but those longer term fixed rates have fallen now sort of down to around 5%. Got sort of 2 and 3 year rates that are definitely sort of starting to breach 5%. Shorter term rates are coming down. We expect them to continue to fall. The OCR at the moment is 3.5. We've got the next OCR announcement on the 28th of May. We're expecting 0.25% decrease and then a further 0.25% decreases over the next 3 months. That should see short-term mortgage rates bottom out at about 4.5%. Now, most homeowners are only just starting to get the benefit of those lower rates now. Most people were fixing for 6 or 12 months. They're starting to come off those fixed rates. They're starting to receive that benefit. That benefit will eventually flow in through into the economy and things will start to feel better. Once we get a bit of an economic recovery coming through, there is one at the moment that's coming through our export sector in terms of agriculture. That's not really flowing through into the cities yet, but you get that sort of export-led recovery combined with the lower interest rates, and things will gradually start to feel better. That will eventually flow through into the housing market. As it stands at the moment, we've got a bit of a supply-demand imbalance. We've certainly got more people trying to sell than to buy. That's holding house prices down. Some of that seller activity is coming from builders and developers that have excess stock that they're trying to sell into the market. Not necessarily the stuff you want to live in. There's a lot of excess townhouses out there at the moment. That's also holding down rents. So as a property investor, you'll be struggling to sort of get the rent growth that you might have got historically, but you have got the benefit of these lower interest rates coming through. That will gradually unwind, particularly as immigration starts to pick up again. Immigration's not really going to pick up unless we end up in World War III, or we get a good economic recovery that's creating job growth that's attracting people down here, and then we'd start to see immigration increasing as well as not so many Kiwis leaving the country. That's it for this month. Talk to you again soon.